You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 2nd of October. Welcome to the fall-winter trading zone. We're out of the summer doldrums, and it is beautiful. What do we see going on in these charts? Well, at the end of the week, after 1, 2, 3, 4, the 5th week going, it looks like, and again, it's not a hard crossover, but it looks as if the S&P 500 is crossing over going up. We are going to be very careful in that, and I'm even hesitant to send it out without in the text messaging, just because it is such a close. We still see the derivative oscillator is negative. It's not crossed over positive yet, and I just don't think we're gonna put that out in the text blast that we have a weekly vertical crossover on the S&P 500, because if we have any kind of down day at the beginning of the week, it's just not going to happen. Now, if it's a booming up day, yes. So please just be aware of that. Watch where the market is, how big it opens on Monday, and around 10:30 a.m. if you have a chance to glance at the market and sort of see where things are. We do have another weekly vertical crossover we'll talk about in a minute that is a real one, that is a good one, but this one I'm just a little hesitant on. And what do we see going on as we really analyze this? Well, we see that we're still, the market has really for the last 3 weeks been topping out at 250 or so. And in fact, it ended the week, the last was 249.93. The high was 251.32. But again, we've sort of slid across the way at about the 250 mark and really haven't closed above that. Haven't closed at all above that. So take that with some trepidation. Is the market getting ready to just zoom up? It could be, or it could just be sliding along because it doesn't have any more power and it's getting ready to roll down. We can't forecast that because we are not augurs. We are not crystal ball readers. Remember, we are trend followers. So we'll pay attention to that and just, again, sort of see where it goes. Remember, first rule in trading, don't lose money. Second rule in trading and investing, make money. But always remember that first rule. Now, you can practice trade anything, and I encourage you to do it. That's how you're going to learn. So don't hesitate. Hey, 10:30, if you're interested in jumping in because it looks like it's a weekly vertical crossover, you can sure do that. And don't hold yourself, don't depress yourself with your trading when they don't work out, when you're doing super risky stuff just to experiment, okay? Because you're using virtual money. Do that and mark it on there that, this is not obeying the current rules. This is something I'm experimenting on. And then that way you can sort of forgive yourself when it doesn't work out. What's going on the 2-day chart? Well, of course, we've had a 2-day crossover back. Well, I'm sorry. Forgive me. I'm looking at the wrong line. The 2-day vertical crossover happened back on the 12th of September. And again, we can see how the market, since that 2-day chart ending, 2-day candle on the 14th of September, it's really moved sideways, and only during the past day, 2 days, past day, the 29th of September, have we seen it really rise above that level of where it stopped at about 250. We did see the 2-day candle go up higher than that. And again, we're talking the 2-day candle to about 250.70, so up, somewhere around $1 or so. So again, we've seen some acceleration. We see the price percent oscillator accelerating. We don't see the derivative oscillator accelerating. So again, it's already been in an up move since the 2-day crossover back on the 12th of September. So a little bit more of an acceleration. Again, the S&P 500 up 0.34% for the day on Friday. We look at that 4-hour chart. Remember, we had that 4-hour crossover going up back in the morning on Friday, the 29th. Actually, we've seen it going up since all the way back at noon, the close of the noon 4-hour candle on Wednesday, the 27th. So things have been sprouting up, and now we have that crossover going up. So let's just see how long that continues to move. So again, a little bit of trepidation. You can sure call it a weekly vertical crossover going up, but it is a weak one. We'll see a strong one here in just a minute. That's where we are in the S&P 500. Let's go to QQQ. What do we see going on there? Well, as you know, the Qs has been in a confirmed weekly vertical crossover going down since the 16th of June. Now, it's had some up moves definitely since then, but it's been in a consistent crossover going down, which means that the price percent oscillator and the derivative oscillator have both been negative. So it has had up movements for sure. I mean, it was somewhere where it started that down move at about 140, almost 141, and it's ended up closing over the course of the week at 144.21, so up about $4 or so, $3 or so. But what do we really see going on with it? Well, we see for the last 2 weeks a down move. We had a 2-day crossover going down back on the 2-day candle ending the 22nd of September. And as we look at this weekly chart, what does it tell us? Well, it tells us that the mood has turned down on the NASDAQ 100. Derivative oscillators continuing in its down move, and the price percent oscillator has refused to cross over for many weeks. And again, it's been week up movement as far as our Heikin-Ashi candlesticks go. And again, closed up 0.72% on Friday. But as we start looking at a little bit more involved in that 2-day chart, what do we see? Well, it was down for 6 days, up over the last day and a half. And again, just the first day of the latest 2-day candle, but still didn't close above where things started moving down on the 2-day candle ending the 26th. So again, we also are in a confirmed down move on the 2-day chart. What have we been waiting for? Well, we've been watching the candle and the pullback on the 4-hour chart for a potential jumping in point on the Qs. Why? Because the 2-day chart's in a confirmed down move and the weekly chart's in a confirmed down move. The 4-hour chart is in its classic pullback stance. So when it crosses back over going down, that is your jumping in point. Some of you have been asking about using the 2-hour chart. You can use that too, and as we've said over the last few days, there's some trepidation there. The smaller the chart, the more ambiguity you can get, the more confusion there can be there. So just be forewarned that if you start using that 2-hour chart, you're going to get a lot more frequency buzz and a lot more confusing jumping in and out points. But again, encourage you to experiment. You can use actually both of them for jumping in points on practice trades. You can try it with the 2-hour, try it with the 2-day, if indeed these roll back over going down at the beginning of the week. They may or may not. These moves may be strong enough to pull the 2-day and then the weekly back over going up. But just remember, we are waiting. The trigger, got our finger on the trigger. We're waiting for the crossover going down for a jumping in point on the Qs. Now, let's go to what we have, TLT, the 20-year bond fund. What do we see here? Well, at the end of the week, we do see a pretty significant crossover going down. TLT has been going up since the weekly vertical crossover going up all the way back in February. We've had some beautiful trades on the 20-year bond. Well, the last 3 weeks have been enough significant down movement to cross it over going down. We will be firing off a text message over the weekend to all of these subscribers saying there's a weekly vertical crossover on TLT going down. What does that mean? Well, as we hone into the 2-day chart, you can see that it's continued to trundle down. And again, the derivative oscillator's heated up and the price percent oscillator has heated up down. As we look at the 4-hour chart, what do we see? Well, we see that it does appear to have bottomed for the time being, and we'll continue to pay some attention to that. What you need to do if you're interested in jumping into a practice trade on TLT, we have a standard that we like to try to employ when we have a weekly vertical crossover. It's worked time and time and time again. Doesn't mean it works every time, but it's worth trying. And that is, look at the market at 10:30 after idiot hour ends on Monday. See what things look like on the 30-minute chart, because we're looking at 10:30 and you've got to have a 30-minute chart and able to look at it. So what you want to do is check out where things are. If the market's bounding up strongly, then you probably don't want to jump in at that point once things settle out by 10:30 or 11. But if the market is starting to roll over or going down on that 30-minute chart, you might consider pulling the trigger. There's some people who just pull the trigger at 10:30 regardless, because they have experimented enough and seen over and over again how strong the weekly vertical crossovers are and how they work many, many times. So again, this is all about experimentation and you developing your own style of trading and things that work for you. And the reason you need to use your trade worksheet is because that's your learning tool. That's your historic record as to how things worked or didn't work. You can't keep all this stuff in your head. You need your own study paper and guide, and it's your experience. And if you record it, you're going to have a record of it. Otherwise, you're just going to do a whole lot of stuff and spin around and not do smart things. So that's where we are on TLT. And again, it was up for the day 0.23%. So back to the weekly. Lastly, gold down 0.5% for the day. Third week of down movement in gold, hasn't crossed over down. Looks like it's getting close on the weekly chart. As we look at that 2-day chart, what do we see? It's continuing to trundle down. Days and days of down movement, only one 2-day up candle, and that was back on the 26th where things just sort of took a breather but never penetrated. What a beautiful, beautiful trend line we have going down in gold. And then, of course, what's going on our 4-hour chart, which is our chart that works over. Isn't it beautiful? If you would have gotten in somewhere, again, in the afternoon after the 4-hour crossover, and again, this is a total trading chart. The 4-hour chart works time and time again. It's one of the few that does work, except in about mid-December until mid-January seems to not work. Occasionally, it'll slide sideways and goof up a little bit, but the 4-hour chart works over and over again. What do we see going on? Well, if you would have jumped in somewhere around 127 or so when the market opened at noon, well, I'd say when it opened at noon, when the candle opened at noon, back there on September the 11th, of course, it's gone as low. What is 121.80. So again, that's a pretty good down move. If you had gotten into a put, that is, you had shorted gold during that time period, lots and lots of potential profit in there. Just really beautiful. We see on that 4-hour chart the derivative oscillators continuing to gain downward momentum. And of course, the price percent oscillator has yet again kinked over in the afternoon, moving down. So lots of better down movement and momentum. And of course, it punched through that 122 mark or so, which is what we were wondering if that would be a floor. It has not. And of course, it was a floor all the way back in about mid-August, where gold hit that and bounded off. So it's still near that. So just again, keep your eye on it. But really beautiful what gold has done. So continue to watch things. We will keep you posted on all that. We will be putting together over the next couple of days, we're going to put together the quarterly training that we promised. We have had the latest quarterly chart come to a close. And those of you who haven't had that quarterly training, we're going to send it out one more time. That is the first training that we did on the quarterly on the S&P 500. It is a beautiful chart to behold. And of course, we're going to talk about what's going on this quarter as it has come to a close and take into consideration everything we taught earlier. If you are a subscriber and haven't received the initial quarterly training, if you've already received it, you don't have to ask for it again. We will be happy to send it out to you. You do have to be a subscriber. Go to chartingwealth.com, sign up, and then just reply to the first email that you get with the daily market review and the weekly market review over the weekends, and just reply back, put somewhere in your email quarterly, and we will forward to you the link to that quarterly chart training. And we will see to it that you get the new training that we're about to put out. My friends, thank you so much. Hope that you have a great weekend. You're excited about the coming week. Don't forget, weekly vertical crossover going down on TLT. And we appreciate you being with us. You have questions, problems, concerns, all you got to do is write us cw@chartingwealth.com. And of course, you want all the benefits, all the training, all the worksheets, all of that stuff is available if you subscribe for free to our daily market review at chartingwealth.com. God bless.